Hello guys, welcome back to the YouTube channel. Remember, on this channel I always do my trade setup, my trade pairs. Today I'll be teaching you how you can be able to trade when market is consolidating or when market is ranging. We normally have three major types of market structure: the uptrend, the downtrend, and the consolidating market, and we majorly trade only uptrend and downtrend. So today, join me on the chat while I show you how you can be able to find quality setups when market is consolidating or what you can call ranging. If you're new to this channel, don't forget to click the subscribe button and turn on bell notification so you won't miss updates when we upload new contents to this channel. And if you're not a subscriber, thank you for always watching our videos and like this video so it can be recommended to more persons. Join me on the chat. Let's do this together. So guys, here on my chart, I'll be giving you a quality breakdown on how I was able to catch the setup. But before then, let's find what we call a consolidating market, and I will show you how you can be able to find where to actually start even looking for a setup, or when you can actually know that, okay, now I should be expecting to see a setup. So I'll be clearing everything on my chart. Let's start afresh. So right now my chart is clean. My chart is now clean. So let's do the breakdown together. So first of all, you have to go on a higher time frame. On my higher time frame, like my 4 hours time frame, I have to know what we call zones, like major zones that I'm expecting market to react from. Because if you're not able to get zones like that, then you should forget about trading anything. Anything you are trading, you can't be confident enough to know, okay, market is likely going to be, I'm likely going to be on the positive side of this probability of either winning or losing. So first of all, on a higher time frame, like the 4 hours time frame, if you notice, market has just been somehow scattered. The chart has just been scattered, right? Now, where I do consider is recency, like the most recent part of my chart, which is just like the most recent. Okay, for example, here, if we have not traded anything here, and market just did something like this, I should focus on this. If market is still here, I should be focused on this area, right? If market is here, I should focus here. If market is here, I should, like market is then here, I should focus here. That, okay, let me just use this and explain something. For example, if market goes this way and market is somewhere here, if for any reason market should come down, I'm looking at only this area now. Can you see that? Nothing concern anything that happened here again. I'm just looking at these areas, right? Until market clears this low, I will then look at the next low and the next low and the next, just like that. So for me to take trades on this chart, I should first of all consider that market is in an uptrend, downtrend, or consolidating. If market is consolidating, then we have to use the lower time frame very well. So take for example, at this point in time, we can all clearly see that markets reacted from somewhere around here, right? You don't need to know exactly, maybe an order block, demand, just know where market is reacting from. So from there, we can do other analysis from there. Can you see that market reacted from here, and which was why market pushed off all the way from here, and market is now buying all the way to the upside. So if market should buy all the way to the upside, there are zones I'm likely looking at market to react from. But since market is not yet up to this zone, then I should just focus on recency, where market is currently. So you can see that here we have what we call a recent, like, swing high, like the most recent swing high, which was here, right? And this is my 4 hours time frame, don't forget. So from here I can now go lower to see or wait for market to come here, and you can see that market has already tapped into this area as at yesterday by 3 p.m. So I will then lock this area, knowing fully that here is where market is currently at the moment. And remember, I'm a day trader, so you shouldn't expect me to hold trade past today unless market does something great that particular day. Then I can just hold to maybe full target or full potential, so something of that nature. So for me, market has already reacted and market is already at this most recent high. You can call this a supply area because there is a closed inducement around here, and market invalidated that inducement. So it's more or less like saying here is a breaker block area or a retest area. You can also check the second thing, which you can now go down to a lower time frame, like our 2 hours time frame, which is my 120 minutes. So on a 2 hours time frame, you can also see clearly that market created what we call a trend line liquidity around this area, right? And then market came to clear the whole trend line liquidity, which was also aligning with our previous supply area that has now been invalidated to now become a new support or a new demand area. Hope you are following. At this point, I know most people click off, but pay attention. Remember, we have a goal of showing you how I was able to catch that quick setup, and to prove to you that it's real, that I really saw that setup. Here is it, and here's my Telegram channel. You can just check my Telegram channel as at today, being 13th of August. You can see that I really sent this trade, but I sent it late and I was not able to spot out something, which I will also tell you in this video. So make sure you stay glued and don't lose focus. Let's go ahead. So at this point, market has already taken out the trendline liquidity, and you can see clearly this is market taking out trendline liquidity, right? And market is now in an area that we are likely looking at for either a buy or a sell. So I don't need to start going for 30 minutes, 45 minutes. I should just go straight to 15 minutes. So on my 15 minutes time frame, you can see the market is clearly in what we call just a high and a low. So let's mark out the highest high the market has ever been, which we can see clearly here, right? The highest high, like the resistance area around this area. As at yesterday, market was here. Market was just here, and then dropped this low, right? And this was the move that made market tap into that area we are expecting market to come into. So at this point, we have different goals now. The first goal is to see if markets can clearly clean out all the liquidity at this side, because by now I believe the market has stored enough liquidity around this area, and we should be expecting market to come and clean everything off. So if market is able to clean it off and hold above here, we can possibly say that market is already changing trend and no more in a consolidating phase. But as long as market is still within this range between this side and then this low here was the most recent low as at then. Can you see that? So here was the most recent low, here was, so some people do call it sell side liquidity and then buy side liquidity, but at this point in time, let's not give many things names. So going down to more lower time frame, because market is seriously consolidating and we can't actually get enough data from here, you can then go down to a 5 minutes time frame to see how markets, first of all, let's see how markets reacted around this area and what caused this move. Remember, this move, I will also show you that I saw this move and I took a trade, though that I didn't get to have full, that thing they call full knowledge of where market is selling to, but you know that market is likely going to buy or sell. So full take profit or full target is not what I'm actually going to be explaining in this video. We just need to find a way to maximize. At least 4 RR, 5 RR is enough, but you can go for max targets, right? Stay glued. So the moment market swept liquidity around this area, the next thing you can notice that markets around here also give us what we call liquidity sweep. And after this liquidity sweep, here was the most recent low the market went, right? And after this low the market went, you can name this S. S for me means liquidity sweep. Market has swept liquidity around this area, and now you can equally wait to see if market can then shift structure and buy out to the way to the upside. So here was now the most recent low, and here was the previous recent low. Hope you are following. So the moment market came here, if you go down to a more lower time frame, you can clearly see how markets reacted and bought all the way to the upside. Okay, let me just do that. Bonus. So market came lower. Right here, you can see that we haven't gotten any full information. You can also go down to a 1 minute time frame. I wish that was exactly what I did yesterday, and I was able to get that trade. And the trade printed a very clean sum of money. Although I took the trade on a 100k Profem account, though a competition account. So I do prefer to off my candle, so I will have enough view, like I will have a clearer view of what I am expecting to see. Remember that the pattern I do trade is something like this. If market is in a downtrend, I expect market to drop lower, give us a recent high, clear the low, right, and then chief structure from here. If market is able to chief structure, you can expect to see maybe inducement or no inducement, depending. The market does something like this and then comes to clear this inducement. The next thing we expect to see is market to buy all the way to the high. And let's compare this pattern to this pattern here. You can see that it's exactly the same thing. So let's mark it out. Let's mark it out. So if you notice from here, here's our liquidity sweep, right? Yes. So after liquidity sweep, here is our market structure shift, right? Here market shifted structure, or what some other persons call change of character. Here was it, right? And here is our valid inducement level, right? The next thing I do use is fib. I plot my fib from the low, the lowest of the candle, the most valid candle around that area. I connect it to the highest side the market went, and I expect the inducement to be above this my area. Remember I said that you can use 75 for this your middle line, you can use 77, 78, just depending, because my own I do change it depending on how market is evolving and how market is changing. So I do change my own. I don't have anything that is stamped that it must be exactly this way unless the pattern. So here is now my inducement. I named this dollar because it's liquidity, and I expect market to tap into this area. You can get to see another block here, or you can get not to see, but anyway, just know that if it's already at this fib level, you can take your trade. So that was how I was able to get a trade from here, of which you can see the trade playing out. I'll attach the video, the screen recording I did, and the screenshots. You can see how the trade played out from here, and my initial target was just my fib level. But for the fact that market has swept liquidity, and market also tapped into our 4 hour area, so we have a higher chances of seeing market go higher. But I didn't know that market will go all the way higher to this area. Only what I knew that is that market is likely going to come over to this area, and this was more or less like a max target for me. But from the look of things, you can see that market came as far as going up to this area, so which means that at that full target is 19RR, but at my previous target, I was previously looking at market to get to, is just 9RR. So this was how I was able